Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm thrilled to welcome Gary Savage to the program, precious metals analyst and president of the Smart Money Tracker Investing newsletter. We're going to explore the price suppression being perpetrated by bullion banks on both gold and silver today, and why Gary thinks they've largely lost control of gold, with silver next up to break free. Gary ultimately believes that silver will outperform everything, but he also thinks gold will soar to at least $10,000 an ounce this cycle, and he lays out his reasoning and the signs to look for that it's time to take profits. All of this and so much more ahead in my conversation with Gary Savage. Gary Savage, great to have you on Commodity Culture. I want to kick the conversation off with silver and a tweet you made a couple days ago where you said the cartel is again failing to drive silver back below that $37 support zone. The process of breaking the suppression in the silver market continues. So firstly, I've spoken to a lot of guests on this show regarding the manipulation of precious metals. It just had Ed Steer on the show last week to discuss this very issue. But I'd love to get your take on, firstly, who the cartel is that is attempting to hold down silver, and secondly, why they are failing to push it below $37.
Well, it's pretty obvious. It's the bullion banks. Um, if the authorities are not going to enforce the rules, then you got a cash cow. You can suppress price whenever you want to. You can make money on the downside. And when you've made your money on your shorts, you cover and you make money on the long side, just like guaranteed money. They get some fines here and there, but if you're making, if you got to pay 900 million to make 10 billion, that's a pretty good deal.
And then why are they failing to get it below 37 at this point?
So the suppression in the gold market broke last year, and I noted this at the time when they failed to drive, and they tried multiple times, tried to drive gold back below 2,000. And they couldn't get any selling pressure. They couldn't get any momentum going, so they couldn't get it low enough to cover their shorts. So it started a short squeeze, and you can see what happened. We've got a 1,500 point rally in a little over a year and a half, I guess it is now. The suppression in the miners broke several months ago. They're not able to hold them down anymore either. And I think it's in the process of breaking in silver. They held it below 33 for weeks and weeks, and then they got a gift when the stock market had that kind of a mini crash in, what was it, April, and silver sold off pretty hard, and you could tell they were they were covering their shorts, which produced this very aggressive rally in silver. So it came back very quickly. They were desperately trying to cover those shorts. And then we got to that $33 level, and they kept it suppressed below 33 for weeks and weeks and weeks. And then we get the breakout, but then you get the stock market crash, so it pushes it back below it. They cover those shorts. They're back at 33 weeks and weeks and weeks. They've held it at 33. When that broke, the next resistance zone was 37.50-ish. Weeks and weeks holding it below that. That broke. We got to 40, and I mentioned at the time that silver probably wasn't going to go through 40 on the first try. It's just a big round number, and there was going to be some natural selling it and profit taking at $40 anyway. And but I don't think they're going to be able to hold that either. And they've tried multiple times to drive it back below that 37. If they could get it back below that 37.50-ish, then I think they could probably hold it there again for multiple weeks. But they're not succeeding in driving it back below that, and I don't know that they will. And if they can't by the end of the month, then I think we're going to get another test of $40. And I don't know if it'll break on the second try, but I think it will on the third try. If the bulls can't get it through 40 on the second try, I think they're going to get it through there on the third try. And I think silver's probably going to test $50 before the end of the year.
And when it comes to the reasons for silver and gold price suppression, obviously you mentioned it's an easy way for the bullion banks to make money. Is there I've spoken to some guests as well who believe there's a grander scheme to take the public's eye off of gold and silver's role as money through this price manipulation, through this volatility, convincing your average person that it's not worth owning gold and silver because there's no real upside potential. It's an ancient relic. I think, in fact, if you were to approach a random person on the street pretty much anywhere in the world and ask them about gold and silver, they would have no clue. So in that sense, if that is their campaign, it seems it's quite successful at the moment. Do you believe there's that sort of, I don't know if you call it a grand conspiracy to take the public's eye off gold and silver as money?
I have a bit of a different take. I don't think gold and silver is going to be used as money ever again. There's just not enough of it. I doubt that we're ever going to tie the dollar or any currencies to gold and silver again. But gold and silver is the barometer, maybe you could say like the canary in the coal mine for inflation. So in 2007, 2008, when the housing market was collapsing, the Fed started printing a lot of money, cutting rates, trying to prop the markets back up. And the problem was they ignored the commodity markets. And so, all of that liquidity that they wanted to go into the housing market and the stock market didn't stay in those markets. It leaked into the commodity markets. That's when we got that surge in oil to $147. And it just created massive inflation. And that's what exacerbated the recession. And so I think they learned their lesson. Like if they're going to, try and manipulate asset markets, and the asset markets they want going up are housing prices and stocks. That's good asset inflation. Everybody likes that asset inflation. What they don't want is commodity inflation. That causes, if it gets too high, it causes a recession, especially oil. If the price of oil goes too high, too fast, collapses middle class, lower class spending, and then you spiral down into a recession. So they learned their lesson. Now, going forward, you could try and do one of two things. You could either try and suppress all of the commodity markets, basically impossible, or you could try and suppress the barometer, the canary in the coal mine, which is basically is gold, but silver pretty much follows gold. So if you can keep gold somewhat suppressed, and they can't stop the bull market, but they can keep it suppressed and slow it down. If you can do that, the rest of the commodity markets basically kind of stay in check, and it worked great. We haven't had any serious commodity inflation until, it started coming out of the, I think that 8-year cycle though was October of 2022, I think. But it was, creeping up, and then when the suppression of the gold market broke, is basically at that point it was hopeless. And they've created a deficit in the silver market for the last 5 years. So I think they're in the process of losing control of the silver market as well. They've already lost it in the gold market, and they've clearly lost it in the mining stocks. And I think they're about to lose all control of the silver market as well.
And now a quick break to hear from our sponsor, ARC Silver Gold Osmium owner Ian Everard is considered one of the most honest and level-headed gold and silver dealers in the United States, praised even by his competitors. So give him a call today to take advantage of the specials right now. Silver Kangaroos 2023 1-ounce coins, mint fresh, only $2.47 over spot. Mint fresh silver maple leafs 2025 coins, 1 ounce, $2.87 over spot. While supplies last. Reach out today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And now, back to the interview. How much does silver's industrial demand play a role in this whole scenario? Because obviously we hear a lot about its demand for solar and it's just in everything. I mean, the amount of different things that make up our modern civilization that have silver in them, all electronics, etc. And particularly when we look at potential upgrades to power grids, for AI data centers, all of this energy demand that's coming up on the horizon. How much do you think that industrial demand for silver will force true price discovery?
Well, it's a big part of the deficit problem that we've had every year for 5 years, and the problem is the price of silver is just too low. So the price needs to go up, and then you know supply and demand will balance out. But the problem with suppressing price is that when it breaks, price doesn't just go back to where the normal level, quote unquote normal level would be. It pendulums way too far to the upside. And so the suppression of the gold market and the silver market for literally several decades is almost certainly going to result in gold going much higher than it would have naturally if they just let it trade normally. And I think the same thing for silver. And that's, I've made this prediction multiple times. I think the price of gold it's going to be a piece of cake to get to 10,000 before this bull market's over. And silver, $100, that's just way too low. I've said this, silver's going to be, or $100 silver is going to be a piece of cake, but that's way too low. I think 250 is probably going to be a piece of cake. And I think it's not unreasonable that silver could get to 500 as we, go way too far to the upside just because it's been held down for way too many years and it's created shortages and a deficit. And then, like you said, there's so many industrial uses that are coming online that the demand for silver is just going to increase as we go along.
Gold has been consolidating for around 4 months now in the $3,300 ish range. As you mentioned, all the ingredients seem to be there to push the price higher. Do you think that's what's coming next? Do you think we could be overbought and due for a correction? What do you make of the recent price action in this 4 month consolidation?
So if you'll notice, when we broke the suppression at 2000, what used to be a normal correction in gold, about every 20 to 25 weeks, you would get this intermediate correction, something that lasts 6 to 8 to 12 weeks. In other than like a minor daily cycle correction, which might last 5 to 10 days. But ever since that suppression broke, we are not getting normal intermediate corrections. They usually they would form as an ABC correction, and it'll be a pretty deep, scary correction, maybe something that takes price back down to or close to the 200-day moving average, or even below it. We haven't had any of those since the suppression broke in 2000. Every single intermediate correction since then, including the present one, has formed as a sideways consolidation, which tells me that the shorts are in trouble. They're trying to get out of those short positions, and we just can't get a normal intermediate correction anymore. All we're getting these sideways churns that allows the 200-day moving average, say, some time to catch up to price, and then you get another leg higher. And as you said, we're about 4 months into this one, so I think it's probably about to come to an end, and we're going to get our next leg up, which I think will unfold before the year's over. I think gold's going to go to 4,000, somewhere between 4,000 and 4,300, judging by how far the last rally went above the previous peak. Gold tacked on about, I think it was either 700 or 800 points. If we assume something similar, then our target zone would be somewhere between 4,100 and maybe 4,300 during the next rally. And then, who knows, maybe we get another sideways turn, or maybe we get a normal ABC correction. But we're still early in the 8-year cycle. I tend to think we're going to get our final bull market move, the parabolic phase where gold goes to 10,000 during this 8-year cycle. So somewhere around between 46 and 26 and 28, I would expect we'll get that final move in gold, and we get that big parabolic spike, and all your neighbors are buying gold and silver, and when that happens, it's time to sell your gold and silver.
And what is your opinion on the question of gold revaluation in the U.S.? Gold sitting at $42.22 on the Fed's balance sheet. The Fed recently released a paper examining gold revaluation in other countries, so it's led to speculation that perhaps this is a move they're considering. Is this a realistic proposition in your view, and what could the potential implications of such a move be?
Yeah, I don't know what that would accomplish. I mean, they obviously should value the gold at the market price, but can't pay off our debt by revaluing gold unless you were to revalue it to, I don't know, 25,000, 50,000. But then you'd have to, basically sell your gold or something. So I don't know. I'm not really, I haven't really followed that. Sounds a bit like a conspiracy theory to me, but I do think that they should probably just value, assuming there is any gold in Fort Knox, value it at market price. But are they going to sell it to pay the debt? Doesn't seem likely to me.
Well, both the gold and silver mining equities appear to be waking up. You mentioned that the suppression in that sector had ended as well. We have now seen the GDX and the SIL ETFs greatly outperforming the metals themselves, as well as completely smashing the broad market. They're both up over 60% year to date. Do you think we're on the cusp of a significant bull cycle for the miners? And if so, how long could this go on for, and how high do you think prices could go?
Well, we've been in a bull cycle since that 8-year cycle low in October of 22. We're still in it. It's starting to accelerate a little bit because like I said, I'm pretty sure that the suppression of the mining stocks broke as well several months ago. They've broken through the last resistance until they get to the all-time highs, which I want to say is around 68 on GDX. So that would be, I think they're going to get there during the next rally in gold. I think they're going to get to that 68. There'll probably be a pullback. It might take 3 attempts to get through that, but I think with gold at 4,000 or above, I think they'll probably break out and have some kind of a sustained run, and then maybe have to come back down and test that level during the next intermediate correction. But yeah, definitely we're in a bull phase, and we're going to be until, like I said, 27, 28, whenever this tops. Maybe it tops sooner than that. Maybe it tops at the end of 26. If we go parabolic in 26 and we get to 10,000, we're getting pretty close to being, the end of the bull market at that point. But I don't know when to predict that's going to happen, but I know what to look for to say that it's getting to the end. When my neighbor starts bragging to me about how much money he's making and buying gold and silver, then I need to sell my gold and silver to him.
So there is a price at which you would sell your gold and silver physical, because I speak to some people who say that I will never sell my physical no matter what. This is like my generational wealth. This is my way of removing money from the financial system free of counterparty risk, and I plan to sit on it forever. You're of the mind that there will come a time where, like you said, your neighbor's bragging about making a bunch of money on gold and silver, when it will be time to get out of the physical metal.
Absolutely. All markets get overvalued. All markets get undervalued. When a market gets severely overvalued and in a parabolic phase, you got to sell, and you got to go looking for something that's undervalued. Otherwise, you're just riding these big waves up, and then you're watching all of your gains evaporate again. And the last bull market was 1980. Do you really want to wait 40 years for the next bull market? I don't. If the stock market is, in some kind of, if we're in a serious recession or a depression and the stock market is severely, down 70 or 80% and gold is at $10,000, well, absolutely. I'm going to sell my gold and silver that's extremely overvalued and buy stocks which would be extremely undervalued. So no, I don't want to. I'm not of that mindset that I'm just going to hang on to my gold and silver forever. We're in a bull market. Bull market is going to end at some point. When I see signs that it's getting close to the end, then it's going to be time to sell my gold and silver.
I like that pragmatic approach. And speaking of overvaluation, you mentioned the broad market there. It is tremendously overvalued by almost every metric we can look at. the CAPE ratio, the Buffett indicator, price to sales ratio, just being a few of the metrics. If we look on a historic basis, I think we're at all-time highs in all of them. Howard Marks recently releasing a memo calling valuations worrisome. Do you think the big indices are in bubble territory here? Because I've spoken to so many people, line up down the block of people who say we're headed for an epic crash in the broad market, or at least a grinding lower over the course of several years into a true bear market. And yet we seem to keep inching higher. Are we in a bubble here? And if so, what do you think it will take to burst it?
No, we're not in a bubble. I'm not seeing any signs of a bubble yet. So the last two bull markets, well, I guess you'd have to use the Dow, but the Dow went up about 25 times, and they lasted 20 plus years, 20 to 25 years. Well, we're only, 16 years into this, and the S&P is only up 9 times. So that's a pretty mild bull market. Another thing is AI is still in its infancy. We're not into the crazy phase like we were in 2000, where people were buying any stock that had .com in the name of the business, even though it had no earnings whatsoever. So valuations are high, but we haven't really even, seen the earnings yet that's going to come from AI. So that's why they're high. It's predicting that we're going to have big earnings from this new technology and also robotics. And then there's just, so much new technology that is coming online and is still, either in its infancy or adolescence. So I think we've probably got several more years. And I think, again, the signs are pretty obvious when you're in a bubble. Price gets stretched. I think the NASDAQ was like 60% above its 200-day moving average at that bubble top in 2000. We're not even remotely close to anything like that yet. I think we will be at some point, and I think I'll hear my neighbors telling me that they bought, such and such AI stock, and they've made 100% in 2 weeks. And when I see that, then yes, then we're in a bubble. And buying companies that have no earthly chance of ever making any profits, or certainly not profits to justify the price that they're selling at. So I think we will get a bubble. I don't think we're in a bubble right now. I just don't see any of the signs of it. And when everybody's calling for a bubble, highly unlikely it's a bubble. Usually, by the time we're actually in a bubble, all of those people that have been calling a bubble for years and years, now they've bought into the Kool-Aid, and they think that somehow this is justified. And when those people give up on their bubble idea and buy into it's justified this time is different, then we're in a bubble.
You've got a very contrarian view to a lot of guests I have on the show, which I love, because a lot of people I talk to say that for us to get to a true epic bull cycle for the mining sector, we need to see a rotation of capital come out of these tech stocks. And the narrative that you always hear out there is that, we're in this massive bubble driven by AI and tech, and that when it bursts, a lot of that capital is going to flee into the mining sector, and that's what's going to drive the next leg up. But from your point of view, we're not in a bubble at the moment. And so you believe that the broad market and the mining sector can rise together. Is that correct?
They can rise together, and we can also have a cyclical bear market in stocks. We could have a recession over the next couple of years, and I think we will if the war cycle starts to accelerate again. And if that happens, then stocks would go down, and especially in a war scenario, accelerating war scenario, money's going to flee into what would be perceived as a safe haven of gold. So you could have a cyclical bear market in stocks, which drives the final parabolic phase of the long-term secular gold market. And then the gold market tops, and then the money comes back into stocks, and you get that final, final bull market move in the stock market, which if we assume similar duration as the last bull markets, could be like in 1930 or 2030, 2032, somewhere as late as that. But we certainly could have a cyclical bear market and a recession here in the next year or two, and that could help push money into the metals market.
I want to read something else you recently tweeted. You said it's too late in the intermediate cycle to be pressing stocks. Oil is in decline. Bitcoin has become risky. I don't like bonds. Uranium is probably stuck in a multi-month or multi-year consolidation. The only thing that looks appealing right now is precious metals. Now, going back to my earlier theme of us potentially entering a commodities super cycle, is that a theory you ascribe to, that we're going to see more and more investment in hard assets? And if this theory is proven to be what a lot of people says it is, we will see commodities across the board vastly outperforming oil, uranium, copper, base metals, agriculture. Do you think that's how things will play out in the long term, or does the prognosis on oil and uranium extend out further as well? What are your overall thoughts on that commodity super cycle narrative?
I do tend to think we're in a commodity bull market. I think it bottomed in 2020 when oil went to minus $50 or whatever it was. I mean, if that's not the bell ringing that the bear market's over, I don't know what is. We got our first leg up, and then we've been, especially oil, has been kind of churning sideways. We've got a lot of supply of oil. It may take an acceleration of the war cycle for oil to come back up again and really spike inflation. Right now, oil, the intermediate cycles are making lower highs and lower lows, which tells me oil is in at least a cyclical bear market. Gold, on the other hand, is making higher intermediate highs and higher intermediate lows, so it's in a bull cycle. Uranium, generally, I would kind of think it would follow the energy markets, but I think the world is going to drift more towards uranium. So I think it is in a secular bull cycle, but it's had a pretty good move. And usually, when you get a big move like that, you'll need some consolidation or pullback. I know a couple of years ago, when uranium was on a tear, and everybody was trying to convince me that price could never correct in the uranium market. It was priced in a dark market, and it's just uranium's different than every other commodity. And I kept saying, well, I'm pretty sure sentiment is the same no matter what market it is, and all markets have corrections. And we've been in a 2-year cyclical bear market for uranium since then. Now the uranium stocks have had a nice move, but again, I think they're probably going to need to take a break for a while.
Yeah, great assessment there, because there is a lot of people who got involved in uranium when the stocks were screaming higher, when the Sprott Physical Uranium Trust came onto the scene, and not realizing that there's already been massive gains over the prior several years, and believing that there's still people saying, when is uranium going to take off? It kind of already did. So I greatly appreciate that perspective. So you said the only thing that looks appealing right now is precious metals. Does that mean there's nowhere else you're looking to deploy capital at present? And when you say precious metals, are you looking at the mining sector as well as the metals? And if so, which areas of the mining sector do you think look most appealing at present? Do you think the large producers are still undervalued at these gold prices? Are you looking further down the chain at the developers and explorers? What are your thoughts there?
I like all three. I like gold, I like silver, and I like mining stocks. I don't um, I don't ever invest in individual companies. Just too much company specific risk. Um, you could try and diversify over 10 or 20 individual mining stocks, or you could just buy GDX, and you probably won't outperform GDX because some of those miners will underperform, some of them will overperform. Um, but in aggregate, if you do outperform with your 20 miners, that you're going to have to keep an eye on 20 of them, whereas I'm only going to keep an eye on GDX. It probably isn't going to be a significant a significant outperformance. So, what's the point? You might as well just buy the ETF, and then you don't have to worry about if the CFO tries, embezzles a bunch of money from Newmont or something like that. You don't have that worry. Um, I I tend to think, I may be wrong here, but I tend to think when it's all said and done, I think silver is going to outperform everything. Now, there will certainly be some mining stocks, especially some juniors, that are going to outperform silver. But all in all, I tend to think silver is probably going to outperform everything because I think it's the most undervalued commodity on the planet. And when, as we, I've noted this before, silver tends to come on towards the end. Not only at the end of an intermediate cycle, you start to get these big moves, maybe even 7% in a day, but also at the end of the bull market, you'll get this huge move at the end of the bull market. So let's say we get to $50 by the end of the year, and maybe it takes another year for silver to get to $100, but then it could literally go from $100 to $500 in the last 3 months of the bull market. That's just how silver moves. Gold gets really expensive, and some of that capital, maybe is looking at $8,000-9,000 gold, and is like, well, silver's $100. I'm going to start putting money over here in silver, and it doesn't take much liquidity coming into the silver market to produce those huge moves towards the end of a bull market. And that's another thing you want to look for to tell you that it's getting time to sell. When silver starts to have these really insanely large one-day moves, 7, 10, 15% in a day, and when the gold-silver ratio is back down somewhere between 20 and 30 to 1, I think that's the indication that you probably better start dancing pretty close to the door.
And you mentioned ETFs being your preferred way of playing the sector, which, again, I love to hear because for the vast majority of people, they do not have the time to follow 20 companies like you're saying, nor the knowledge of geology and all of the things required to understand, particularly when you go down to the development and the exploration space. I wanted to get your thoughts on the royalty streaming model, your Wheaton Precious Metals, your Franco-Nevadas. Is that another way you see to play the sector in a bit of a lower risk way?
You certainly could. It would definitely, well, you could say it was a lower risk way, but Royal Gold got, the crap beat out of it recently. So it's certainly not foolproof. Again, if you're just, if all you're concerned about is percentage gain, I think you could, I don't know that you're going to outperform significantly. Now, I guess you do get some dividends from those companies, but I don't know that you're going to outperform significantly than as opposed to just, putting your money in GDX. But you can also leverage, and that's what I try and do in the SMT is, since we do have a breakout from a cup and handle pattern, and we are still pretty early in the 8-year cycle, and I tend to believe we're going to get our final bull market top during this 8-year cycle, which could be, anywhere from 1 to 3 years away. Then what I'm trying to do is we try to leverage a little bit when we get an intermediate dip. It's been a little bit more difficult because we aren't really getting those ABC moves anymore. It was much easier to spot a bottom when we would get the normal scary ABC move down. Now we're getting these sideways churns. It's hard to spot when the churn is over and when it's ready to start to trend higher again. You almost just have to at some point just kind of buy and then just twiddle your thumbs and wait and trust that the bull markets by definition make higher highs. So at some point we're going to get a breakout and we're going to get a run in the next leg up. So if you just be patient and buy at some point here, then at some point it's going to break out and run to that next level, which, like I said, I think is somewhere between 4,000 and 4,300. But you may have some frustration in the meantime, like, the last 4 months has just been frustrating, hasn't done anything. And I think silver has kind of transitioned into once it hit $40, it's also kind of transitioned into this frustrating sideways churn as well.
Well, you mentioned the SMT. Why don't you tell us about that, the Smart Money Tracker investing newsletter, what it is you do there and where people can find it?
So, you can just Google Smart Money Tracker and that'll take you to the premium website. Um, or I am on X at Gary Savage 1. Now, ever since the beginning of this year, I've kind of changed how I do the S&T a little bit. I'm mostly just focusing on the metals because we do have that breakout above 2100, the breakout of the handle of that cup and handle pattern. So, there could certainly be markets that could outperform the metals, but you're going to make plenty of money in the metals. You don't have to find the absolute best stock to make money. All you got to do is get on a bull market and ride the bull market to its completion, and you're going to make great money. And what I'm trying to do is I don't do monthly subscriptions anymore. I just do a yearly. I want you to commit to a year. I'm going to make you money over the year. Doesn't mean I'm going to make you money every day. I'm not a day trader. There are going to be periods where you're going to have drawdowns or where we're just like not doing anything. The last 4 months in gold, for the most part, we've just been kind of sitting and twiddling our thumbs. Maybe, we did some small trades in Bitcoin when it looked like it was ready to run. We made a little bit of money, but I'm not, if you're going to get in for a yearly subscription in the metals, you need to understand I'm focused on the metals. And there's going to be dull periods where we're in a correction or a sideways consolidation, and we're not going to do anything. So if it's important to you to click the mouse every day, it's not going to be for you. If it's important for you to make good money, over 12 months, riding a bull market, that's what I'm going to do. And we made really good money. We try and get leveraged before another intermediate move higher. We did that for the first half of the year, made really good money. I think most people are saying they've made anywhere from 50 to 100%. And then I've been adamant, if you're going to trade anything, trade very small. Just don't lose anything. Don't lose those profits by over trading while we're waiting for the next leg up to start. I think it's pretty close to starting here. And then we will do the same thing. We'll add a little leverage and we'll ride the next leg up. And then we'll do the same thing. We'll get on the sidelines and wait for the next intermediate rally. So that's what I do. You have to be willing to commit to a year to me. I'm not going to guarantee I'm going to make you money every month. There's going to be months. There can be multiple months where you're going to be twiddling your fingers, or if we're trading something, it's going to be a very small percentage of your portfolio. We're not, basically we'll maybe try and get a base hit while we wait for the correct setup in the metals. But I am focused on the metals. I think you're going to make plenty of money in the metals. There can certainly be stuff that will outperform the metals. Maybe uranium will be, but that's just not my market. It's not what I'm concentrating on. And I don't care if uranium outperforms gold over the next 4 years. I just want to make good money in the market that I am familiar with, and the market that has broken out of a 13-year cup and handle pattern. And I think still has more years to go in this 8-year cycle. So I will open the S&T for new subscriptions in December. And then, if you want to sign up, then I expect you're going to have to give me a year. I'll make you money over the year, but I'm not going to guarantee I'm going to make you money in January or the first week of January. I'm not going to guarantee that there aren't going to be drawdowns. Like right now, we're getting positioned for the next move up, but there are drawdowns while we get through this churning phase. But once we get through it, then we're going to have the next leg up, and I think most everybody will double the gains that they made in during the first half of the year.
And you mentioned you're open for new subscriptions in December. Is there any way for people to get on a wait list?
I'll just I'll post it to X when
great,
when I'm ready to open it up to new subscriptions, and I'll leave it open more than just 1 month. It'll be open I'll probably leave it open through January or February at least.
Okay, great. I'll put a link in the description below to your X profile so people can follow along and look out for that. Thank you so much, Gary, for coming on the show. It's been a blast.
Well, thanks for having me, Jesse.
Thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. Take advantage of their specials right now. Silver Kangaroos, 2023 1-ounce coins, only $2.47 over spot. Silver Maple Leafs, 2025 1-ounce coins, just $2.87 over spot. While supplies last, reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. And make sure to tell him that Commodity Culture sent you. And pick up your Commodity Culture merch backed by a 100% quality guarantee. Link is in the description below. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.